What's good, everybody? This is KG London, aka the London Session Specialist, aka the Wolf of Wall Street. And today we're going to be doing a breakdown on US30 Dow Jones. I know a lot of people like indices, so yeah, this one is for you guys. So we're just gonna be explaining why we took the trade on US30 today, why we took a sell on US30. And yeah, let's get into it. So first and first, we need to figure out where is the single daily candlestick going to, right? Or where is it most likely to expand to, right? So first thing first would be to mark our key level, right? This is a breaker block. Or I mean, hardcore ICT students would be like, no, that's not a breaker, that's a mitigation block. Whatever you want to call it, my bruh. Whatever you want to call it. Whatever you want to call it. At the end of the day, they're doing the same thing. So I had a previous daily high, swept the previous daily high, hit a key level, and then we came back. But look at what happened. We dropped inside of another key level, right? So this is what made it a bit kind of tricky. We dropped into another key level, which is a daily fair value gap, right? So the midpoint of the fair value gap is called the consequent encroachment. I know it's just bombastic words, but we just have to use the words, unfortunately. So yeah, that's just the midpoint. That's just the midpoint. So this is where we got a reaction from, right? It's the midpoint of the FVG. So it's a sensitive area. If you don't know, now you know. So yeah, this is how I got to the conclusion. So I was targeting a previous daily low, right? I was targeting us to sweep just below the previous daily low. And yeah, so let's just drop into the 4-hour time frame and let's build the narrative, right? So if you're starting ICT concept or you know about it, I think there's a buzzword going around called order blocks. People are aware of order blocks. So this is an order block, whether you call it a supply level or I don't know, supply or demand, whatever, but I think we're all looking at the same candlestick, which is an order block here, or you can call it a supply level or demand level, whatever you want to call it again. So we had a key level. This is a key level on the 4-hour time frame, right? So we're anticipating price to come through, hit a key level, and then drop to the downside. So going to the lower time frames, we just refining our key levels. We're just refining our key levels, trying to find like not a perfect place to get a trade, but a place where you understand that this is where price is is going to make a reversal, right? I just want to put it like in simple terms, right? So we can see at the beginning of the day, price started rallying, price started rallying, going to the upside. So I'm just going to drop to the 1-hour time frame to show you guys how we just do a young hone in. So if you look at this, so what was this? What did I say? What's this on the daily time frame? This was a breaker block, right? So look at what we're doing now. A breaker block on the 1-hour time frame. So price is fractal, guys. Price is fractal. What you're seeing on one time frame, you're going to see on the other time frame. So it's just the thing of understanding which time frame are you basing your trades off, right? And then you just drop down to the lower time frame. So the higher time frame will always win because lower time frames exist inside of the higher time frames. And I saw other people on Twitter having a different conversation saying the higher time frame are the ones that are creating the higher time frames. I'm like, okay. If that's how you see it, my brothers, if that's how you see it, it's fine. So first and first, have a key level on the lower time frames as well. It's important to have a key level on the lower time frames because that's where you're going to anchor your trade, right? So again, I'll pull up the fib just for other people to see it visually there, so that you understand that we only want to sell above the 50%, because it's considered what? A premium price, right? You don't want to be selling at a discounted price. You want to be selling at a premium price. We're only buying instead of a discounted price. So below 50, it's called a discount. Above, it's called a premium price, right? So this is the breaker block. This is what we're going to use to anchor our trade, right? So you don't have to go to the 15 minutes. You can just end here, have your pending order, have a stop loss above, but understand that your stop loss needs to be above there so that it's protected. And then it's just the risk to reward ratio kind of thing, going to sweep previous daily low. So I'll drop to the 15 minutes and we'll start building a narrative from there. So here I'm just giving you guys a trade idea. I'm not giving you guys the whole narrative. So we had a key level right here, right? So what I normally do is I like having my standard deviations. But first thing first, I like having my Asian range, which is from 3 a.m. to 7 a.m. South African time plus 2 GMT. So I like having my Asian range here. And this is for all the people who believe that the market is driven by an algorithm. The markets are not random. This is for you guys. We know that we use the Asian range and we understand what the Asian range is for. But people who do not believe, it's fine. Believe whatever you want to believe. So the standard deviations are simply a tool that we use, right, to look at, where price is overbought or oversold. Price overbought or oversold, right? So normally we go for like 3 standard deviations, then we'd understand like, damn, price is really overbought, right? So, but with indices, we understand that there's too much volatility going on. It's too much volatility going on. And then we understand that you can extend it up to like 5. So 5 is like the maximum, right? 5 is like the maximum. So this is how normally I catch some of my snipers, right? To the pip. This is how I normally catch some of my snipers, right? But also sometimes you miss in terms of snipers. Sometimes you miss mainly because of the spread and stuff, right? So having an anchor here, this is a perfect one because it aligns with the 1 hour breaker, and then it's also aligning with our standard deviations, right? Understanding that price is oversold. And then another thing that I used as extra confluence, like this was the biggest confluence for me to actually understand that we're taking a trade here. Exactly here is this. I'm just gonna pull through here as the divergence. I don't know if you guys know about let me just do this quick. Let me just give you guys a a mini class. So we have okay, wait, let me use this. Let me pull out a pencil. Let me use this instead. Yes, I'm gonna be using this. So we have US30, we have US100, and then we have US500, right? So this is the Dow Jones, this is the Nasdaq, and this is the S&P 500, right? So these things move in the same direction, right? So price should always be symmetrical. So whenever you see price doing this and price doing this, you understand that there is a divergence happening. There is smart money accumulation. This is what we're taught today by ICT. You understand that this swing high is being ran. Liquidity is being taken here, right? Liquidity is being taken here. But here, liquidity is not being taken. You understand? So there's something cooking here. A reversal is cooking. You understand? So this is what happened actually today, where US100 and US500 were just doing a young sweep of liquidity, So again, this previous day, this liquidity that they're sweeping, previous daily highs, previous daily highs, right? But in here, what did we have? We had an order block, which is a key level. Liquidity is a key level, order blocks are key levels. So we were bouncing off key levels, but now it's all about intermarket analysis right now, right? Using the correlated asset classes to try to like figure out where is price going next. So this is what happened. So I'm just gonna show you guys. So look at this one. We had a key level here, right? So look at the sweep was happening on the side. So these columns delineates yesterday's high, which is a previous daily high, right? So look at this. This is a previous daily high. We're doing what? We were sweeping liquidity. People would call it a manipulation. This is the manipulation that happened. and you can go to S&P 500 as well. We had a manipulation on the S&P 500, right? Manipulation on the S&P 500. But when you come to the US30, look at what we have. This is a previous daily high. We didn't sweep above a previous daily high, and we were far from it. We were far from it, right? So this was the divergence happening where price is not symmetrical, right? So hence, it was a big confluence why we took this trade, right? So all of these things coming all at the same place gave us what's the English word that I'm looking for? Yeah, gave us whatever you wanna insert there. I'll leave it blank for you guys to fill it in. But this is all the confluences that we used, and we took the trade, and the trade went well. The trade went well. So yeah, this was part of the trade, the sniper. First trade, second trade. So I had two areas that I was anticipating to see price making a reversal from. So I had Vele, this one, the sniper, and then I had this one as well. I had this one, which is the second trade. So I mean, price could have just made a reversal here, went down, but it went for the second one, right? So you can just anchor with both of these. Have if you're risking 1%, you can go 0.5 0.5, together they make 1%, and this is basically the breakdown. So targeting a previous daily low, we did a young sweep, just a small sweep, small sweep below, and then price is reversing right now, and we're closing off the week. So watch out for, we're just gonna do a market analysis on Sunday, what we could anticipate in the next coming week. So again, please subscribe to our YouTube channel, follow us on Instagram, 5 Star Speculators, and any questions that you guys have, shoot me in the DMs. Danko.